Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin flat corrections. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Now, one of the things we don't really talk about on this channel is Elliot wave theory. And one of the reasons, to be completely honest, is because I'm not an expert at it. I don't claim to be. I have watched multiple people who are much better at Elliott wave theory than I am talk about it. To be completely honest, though, I've seen people make the bullish case and the bearish case using the same theory. I think, like any type of technical analysis, it's easy to sort of apply your own bias to it. However, with that said, you can easily you can look at long time frames and try to make the case for Elliott waves. And I wanted to talk about something because I was sort of researching a little bit and trying to understand what Bitcoin's doing right now. And in the last video, I spoke about the worst case scenario. Okay, and the worst case scenario for Bitcoin, as I mentioned back in May, and I'm going to mention again today, is that it goes back to the 200-week SMA, which is right around the prior all-time high for Bitcoin at around $20,000. But if you told me in a year, Ben, we don't go that low, what happens instead? Well, then look, I would probably be inclined to talk about some type of flat correction for Bitcoin. Now, what is a flat correction? This market cycle has been very, very difficult to navigate. Not only, I mean, the very beginning of it was very easy to navigate because we just went parabolic and we went straight up. It was like a 20x in a relatively short period of time. It was easy for the people who were in Bitcoin in, say, 2019, 2020 to DCA out of that move. I think what has been a little bit more challenging is sort of just seeing it go back down to the bottom of the range, seeing it go back up to the top, and then technically put in a new all-time high, and then come back down to the bottom. So this pattern can be found, and the reason why I'm doing this video after the worst case scenario video is because I think these things can be sort of seen as like rationalizing or reaching for something, looking for something that maybe isn't there. So to be clear, I wanted to go ahead and put out the worst case scenario video first so that it's clear to everyone that is a possibility and that we do go back to the 200-week moving average. But if we don't, and we are in some type of flat correction, then what does that mean? Okay, so what is a flat correction? Well, a flat correction, one of the things that we could look at with flat corrections is this. So you have three different types. You have a regular flat correction, an expanded flat correction, and then it looks like there's just this slightly different pattern here. Okay, so a regular flat, an expanded flat, and a running flat. Regular, expanded, and running. And they're all very similar to one another. And there's certainly, there's one that we can already say is not playing out, and that's a regular flat correction. So we're clearly not in a regular flat correction. And the reason is because we know that Bitcoin put in a new all-time high. Okay, so I don't think we can look at this and assume that Bitcoin is in a regular flat correction because Bitcoin has already put in a new all-time high, as you can see. And so it doesn't look like that. Now, how could this be a correction? The argument with this theory, by the way, is that we've been in a correction since Bitcoin was at 64K. Not 69K, but since 64K. And this is something we've mentioned before, that from a demand side, Bitcoin's been in a bear market since early 2021. But in addition to that, no, there hasn't really been a lot of new retail coming in recently. And so arguably you could say that Bitcoin has more or less been bearish since early 2021, and that the move to 69K was pathetic. It is pathetic. Go look at the weekly RSI. And you'll see what I'm seeing. I mean, the weekly RSI did not even reach overbought conditions on the move to 69K. That's how weak it was. And so when you look at this chart, and if you were looking at this chart rather than the price, you would say, all right, well, we've been more or less in a correction since over here, and it's just been trending down since then. So if that's the case, so if we are in some type of extended flat correction where Bitcoin isn't going to go to the 200-week moving average, but we could still see some more downward movement from where we currently are, what type of correction could it be? Well, there's two, according to these irregular correction. So you see a regular flat, which we're clearly not in because Bitcoin put in a new all-time high. You can see this just means basically going to the top of the range twice and then the bottom of the range twice. But we could be in an expanded flat correction or a running flat correction. So an expanded flat correction is where you put in a high, then you come down and put in a low. So think about 64K, and then think about this as 30K, and then think about B as 69K, and then E is taking out the low that A saw. So what would that mean? What it means is if we take out the low, it means that Bitcoin will break below 28.6K. This is if it's in an extended flat correction. So if Bitcoin is in an extended flat correction, what it means is that it will break below 28.6K and it maybe goes down to 25K or something, and then it comes up. And one of the things that one of the reasons why I could see this playing out is because of the idea of the worst case scenario. You know, there's so many people here that at least the long-term Bitcoin investors that really like to go in heavy whenever Bitcoin's at the 200-week moving average and then just be patient for a long period of time. There's so many people that are waiting for the 200-week SMA that while I still would argue there is a decent probability that it happens, and discounting the 200-week SMA is foolish, and you should plan for it, because all the times that we watch Bitcoin and everyone sort of talks about the returns, it's always easy to talk about if you had bought at the 200-week SMA. There's very few people who actually do it, I have found. So just consider that if it were to go to the 200-week SMA, that would basically be about as good of an opportunity on Bitcoin, more than likely, as you're ever going to get whenever that happens. Whether it happens at 20K in 2022, whether it happens at 40K in 2023, whether it happens at 60K in 2024. I don't know. I don't know when it will happen. But the point is whenever it does happen, that tends to be the best time to buy Bitcoin. And so you should, I believe it does make sense, at least for me, to always have cash on hand in order to buy that dip if it were to come. But let's also imagine that if everyone's watching the 200 week, what happens if instead of getting any type of short-term bounce here, we just come straight down with no bounces? It seems like there's so many people that I've seen, they just keep saying, all right, the minute it bounces, I'm going to take my profits and leave. You know, the minute it bounces, I'm just going to sell. And they've been saying it for so long, and then Bitcoin just hasn't seen any consequential bounce, right? The bounce off of 40K only took us to 44K. The bounce off of 46K only took us to 52. And so what it seems is that the people over here were sort of waiting for this move and it never came. The people over here were waiting for this move to potentially sell and it never came. And so, you know, maybe we're in the same type of scenario again where everyone's sort of waiting for a move back up, and maybe we'll get it. But if it doesn't come and we just go straight down, then there is a decent probability here that we reach some level below the summer lows where the sellers will be exhausted and the demand for Bitcoin will be a lot higher because we are taking out these lows, and I imagine there will be a lot of volume at that point. So one of the things we've talked about is, can we actually see a lot of volume come into the space, because that does tend to mark momentum shifts in the market. Seeing a lot of volume to mark lows, and we saw that in the end of 2018, we saw that in March of 2020. We saw that in May of 2021. And so you have to imagine that if there is no short-term relief, which there's no guarantees, right? I mean, everyone here, I'm sure, would love it if Bitcoin could go back above 40K. A lot of that will be dependent on what the NASDAQ does. Look, if the NASDAQ opens up red this week and starts going down, you better believe Bitcoin's almost assuredly going down with it. And so if Bitcoin does take out the summer low and come down here, there's going to be this interesting region between 30K and 20K, which is also the prior all-time high. It's also the 200-week moving average, and it's also the fair value according to the non-bubble logarithmic regression band. So is there going to be a lot of people front-running the idea of buying here, and they just start buying a little bit sooner, that precludes Bitcoin from actually making it down here? And then you get some type of, as we said before, expanded flat correction where you put in a high, you put in a low, you put in a higher high, but then you put in a lower low. And the argument is that while technically this B is a new all-time high, it's actually part of the correction. I know that sounds extremely weird, and you know, I want to talk to the manager about it too, to be completely honest. But look, we this is what we're seeing, right? We saw a parabolic move into a euphoria stage. We saw a sell-off. Okay, we saw a sell-off. To be completely honest, I was selling over here in the move up to 64K, and then I bought back down here when it dropped. And that capitulation to 30K, I bought back. And then since then, I'm sort of just waiting to see what happens. I mean, I bought during this move to the upside. Now I have some orders on the way down if they get filled. But I think the point is well, what happens if we're in an expanded flat correction? If we're in an expanded flat correction, it means we're going to put in a lower low below 28.6K, probably somewhere between 20 and 30K, and then we will move back up. And then the final one that we could still theoretically be in is a running flat correction. A running flat correction is where you put in a high, you come back down to the bottom of the range, you put in a higher high, which we've still technically done, right? We've seen both of these, a high, back down, a higher high, and then back down, and then up. So we're either in if it is one of these irregular flats or irregular flat corrections, it's either an expanded flat or a running flat. If it's an expanded flat, then it means we're going to take out the low of 28.6K. If it's the other one, if it's the running flat, then what that means is that we would actually be able to hold somewhere around here, right? I mean, if you're thinking about it doing something like this, and if this is the all-time high, and we're going back over here and looking at this, right? A high, a low, a higher low. So that would be the thing that distinguishes the running flat from the expanded flat. This puts in a higher low, this one puts in a lower low, but both of them ultimately get you going to the same place. Okay, so if it's an expanded, or if it's just a running flat versus an expanded flat, then what you're looking at is a higher low, and it's going up this way. If it's the regular flat, I don't think it's gonna be that one. We already sort of excluded that one. And then it's expanded flat, it means putting in a lower low and then bouncing. Okay. And again, I understand that talking about this can sort of just come off as rationalizing, and I fully get it. And that's why we also talked about the worst case scenario. And for me, the worst case scenario, as I mentioned in the last video for Bitcoin, would just be coming back down to the 200-week SMA, and which is also the fair value of the logarithmic regression band fit to quote unquote non-bubble data. So that would be the worst case scenario in my opinion. So worst case scenario, extended flat, running flat, right? Or sorry, not extended, expanded flat. I think some people have called it extended. Expanded flat, running flat. So you see the different ones. All right. So let me know what you guys think of this analysis. Leave a comment down below. Look, I know the market sucks right now, and I will contend we could easily go lower from the current levels, but I think everyone needs to have a plan in terms of how they would navigate all three of these scenarios, whether we hold the line at 34, whether we go down and put in a lower low and then move higher, or if we go all the way down to the 200-week moving average and then have to work it out from there. I think that you need to have a plan either way, and so do consider these possibilities. Make sure you guys subscribe to the channel if you're not subscribed. Check out the premium list at intothecryptoverse.com, and I will see you next time. Bye.